Hi, welcome to the Active Value Investor channel. My name is Victor, and in this video, I'm going to be covering Big Five Sporting Goods. This is a small discount retailer on the West Coast, and I've known of this company for more than 30 years. I'd like to tell you about this company and analyze if this is a good investment. So I like to scorecard my investments, and it's based on 4 criteria. And then I make a decision if it's worth buying additional shares or buying into a particular stock. The first question I ask is it an industry I want to be a part of? I want to know, is the company operating and performing well? Is the balance sheet less than 3 times EBITDA? Is the balance sheet in good shape? I want a discount on the stock. Am I getting a discount? And those 4 questions lead me to the question of, would I buy this stock today? Let's take a closer look. One piece of information that was released today was that they released that their revenue is going down in for the fourth quarter of 2022, and specifically December. And that was all expected. And let me tell you why. When COVID hit in early 2020, months after that, everybody realized that we can't do things indoors, so everybody wanted to go outdoors to play in ball fields, parks, camping, fishing, and all kinds of outdoor things. People are also setting up home gyms and so forth. And Big Five boomed. They sold out of their inventory. Everybody wanted to buy their stuff. And that boom continued into 2021. So that wasn't sustainable because we weren't in a pandemic any longer. Therefore, this reduction in revenue is expected. Now, so that was explained. Their inventory has gone up, I think, because they were so starved for inventory for a long time. They had to rebuild after those big sales and also the supply chain constraints that we experienced in 2021, 2022. So those things were expected from the company. So this news was understandable to me, and I didn't really freak out about it and understood it. But that news did cause the stock price to go down 8.64%. So that's actually an opportunity. And here's why. Big Five is a tiny company. And I believe that in a company of this size, if you really know the company, you really know what's going on, you study the company. I've been an investor in Big Five for more than 3 years. You have this small investor advantage. Let me give you an example. Apple stock, you don't have a small investor advantage. Everybody knows Apple. All the big media outlets, they talk about Apple at least once a day, if not 10 times a day. So there's very little information that is new to anyone. It's very well tracked. There's no discounting of Apple and so forth. But a Big Five, I think the average investor or maybe the media outlets see that their revenue went down, and they have the stock price really go down very quickly. But I'm a small investor. I know Big Five, and I'm very comfortable in this business. Over the last year, it's gone down 51%. It's pretty much the same story, which is their sales are decreasing, and the stock price has been punished, especially since 2022. Overall, was a bear market, and a lot of stocks were really heavily punished. But if you look at the 5-year, that's where you could see where you can make money. I started buying into Big Five in early 2020, where I saw that they had a strong balance sheet. They had a lot of cash. I knew the company. I thought, hey, these guys are going to operate well. I started buying shares at $2 a share, $3 a share, $4 a share, which was great because the stock price at a peak when there was a short squeeze was above $40 a share. So this has been one of the best investments that I've made in the last 5 years. And you see where if you really know a company and you're that small investor, you can have an advantage in a Big Five. Currently, they've been trading sideways and I think are beginning to form, another opportunity to buy into this company. How do we value, Big Five? Well, I can tell you how I did it. I'm taking a number that I'm comfortable with from a free cash flow perspective. I can't take their last finished year, which was 2021. That would just be too high of a number. I'm going 50% of that number. And then 2022 is partially completed, but that number is a little bit off because they've been building up so much inventory because they had such a boom in 2021, such a boom in 2020. They're just trying to get their stores stocked up again. So that really affects their cash flows. Having said that, I'm going with, I think, a conservative number of $50 million of free cash flow per year. I'm also going with a very conservative zero growth. Not expecting any growth, just to make it conservative, and a very high weighted average cost of capital of 13.3%. All those factors give us a conservative valuation of the company of $349 million. But the market cap currently is $207 million. Therefore, you get about a 67% discount on this stock currently. Now, looking at a review of this stock, the performance, revenue is down in 2022, and it was expected. They have free cash flow, and they are profitable. They have a great dividend of 10%. They have a PE ratio of 4.7, which is very low. Market cap is $207 million, and their cash on hand is $34 million, which is 16% of market cap, which is very good. 2023 guidance, this is going to be a profitable discount retailer. We're going into recession. If we're not in recession already, people are going to be really watching what they spend on products. And Big Five is a discount retailer. I think discount retailers will do well in the recession, since they are a place where people can save some money, especially people that have kids in sports, baseball, volleyball, basketball, all those things where you can go to Big Five and get all that gear that you need. And they have a very low expense cost structure, which is also going to help them get through this recession. In this stock here, you can have a small investor advantage. Like I believe I have it. I understand Big Five. I know if they're in trouble or if it's just a news story gone wrong. And I can really take advantage of those swings in my favor. And Big Five will in 2023 produce free cash flow and profits. That's what I expect. I think that's the way they're operating. Therefore, I think the stock has good upside, and they're going to pay a great dividend. All right, so let's scorecard Big Five. Is it an industry I want to be in? Yes, I want to be in discount retail during a recession. This is my one stock that's a discount retailer. I also own Macy's, which has been a good investment. They're more of a premium luxury brand retailer. It's nice to have two retailers kind of at opposite ends of that spectrum. The company is well operated, performing well. And this company, like the leadership has been there for a long time. They really know this market and operate the company very, very well. One ding on this company is their debt is 7x EBITDA, which is too high. It'd be nice to see them get it to 3x EBITDA and have a really healthy balance sheet. You get a discount on this stock as I did my valuation. Therefore, I actually bought more shares of Big Five today. When I saw that big drop, I did my analysis and I took advantage of that information. Thank you so much for watching my video. Really appreciate it. Please keep in mind, this is for entertainment purposes only. I'm not recommending you buy Big Five or any other stock or security.